Are green shoots visible in the capital goods and infrastructure space? That's the question we're about to put to our special guest today, Shirish Rane, Head of Research at IDFC Securities. Shirish joins us from the sidelines of the IDFC Annual Investors Conference. Good afternoon, Shirish. Exactly in which specific areas of infrastructure and capital goods are you seeing maybe the first signs of a return to growth, if at all?
We have been very bullish on ports and road sector for a while. We think there are very clear green shoots visible in roads and ports already. Ports, the volume growth has already been started picking up. In the last month, October, we have seen 13% YOY growth in containers, which is after nearly about a year or more than a year, we have not seen this kind of a container growth. In bulk also, because of the coal imports, we are seeing pretty strong growth in bulk imports. So both these things are driving volume growth in the port segment. In the road side, government seems to have resolved all its pending issues like premium restructuring, old projects which developers were not willing to go ahead because of delays in clearances, land acquisitions and so on and so forth. So both these things have been completed. Premium restructuring has been completed for 11 projects. The environment clearance related project delays the projects have been surrendered by developers to the NHAI. So that pipeline has been by and large cleared. So all these things have now led to a fresh activity in roads. We are expecting about 4,200 kilometers of roads to be awarded over the next 6 months. Out of that, about 1,700 kilometers will be on BOT and another about 2,500 kilometers will be on EPC. So we are very clear that these two segments will do well from here because of this strong activity in these two segments.
How about payment delays, Shirish? Because we were speaking to Mr. Gulabchand yesterday and he said the biggest bane for them is really payment delays from government. Is that likely to affect new orders, or is that only something that older payments have to be worried about?
The problem is mainly in the older orders where there have been claims submitted against NHAI by the road developers, and mainly it is the EPC players who had claims on NHAI for various clearances not being given on time, and they have claimed compensation. And this has been going on now for nearly 4 to 5 years, and the amounts have become very large for some of these guys. And that is mainly a problem for the older projects.
Okay.
Newer projects, older projects. Newer projects, NHAI is in much better shape to award them because they have land in hand and most of the clearances are already in place.
Shirish, which stocks do you think stand to benefit the most from this uptick that you speak of in both port and freight traffic, as well as the roads sector coming back?
We are very bullish in ports on Adani Ports and SEZ and Gujarat Pipavav Port. In roads, we are very bullish on IRB Infrastructure and Ashoka Buildcon.
Okay.
In
Why
roads, there will be other. Basically, where these two companies don't have a balance sheet issues, they can capitalize on the growth going forward. And they have bidding capacity to win new projects. Their old projects are pretty much on stream. They are generating cash flows and they are doing a good job of sort of paying back their debt as well. So overall, I think their balance sheet is much stronger and they have bidding capability for getting newer projects.
Okay. Among sectors that everybody is hopeful will return to strength is power. Now, I think some of the stocks, I understand, or recommendations that IDFC has made have to do with Jaiprakash Associates, GMR, KSK Energies. These are all outperforming stocks according to IDFC, at least according to the data I have. Can you talk us through why you continue to be so bullish? For instance, at JP, asset sales is becoming so sticky, right?
Yes, I think we are very bullish on JPA because we believe they will be able to reduce their debt substantially over the next 12 months. Already a beginning has been made by selling the power assets. Further, they are also looking to sell one of their thermal assets to another private company. So once all of this is done, their debt should come down by about 30-odd%. And if required, they are willing to sell 1 or 2 cement plants as well, if required, to bring down the debt to a sustainable level of about 450 billion or so. And we think this is achievable over the next 12 months, and which is why we are bullish on Jaiprakash Associates.
Okay, there were other companies that I just listed that, you know, I think you all are bullish on, GMR, KSK Energy, all in the power sector. Can you talk us through your investment case for power before we move on to some other sectors?
Yeah, our investment case in power has been mainly that there have been two major issues in power. One is tariff issues and one is fuel issues. And in case of tariff issues, the whole issue is in some sort of a legal circles. It's going around. Currently it's in the APTEL. One of the tariff revision is pending in APTEL. Whereas for fuel issues, I think the coal mine allocation and the linkage given to people who don't win the coal mines, these two things should help a lot in assuaging the coal shortage problems. As far as gas is concerned, the proposed gas pooling arrangement should also help reduce the gas shortage with the gas power producers, and that should be positive over the next 6 months for gas plants. So combination of these two makes us bullish on the power sector, where we think there is not as many issues in PPAs, or there are not as many issues in fuel. So KSK is where we think there is very little issue in fuel, according to us, and that is why we are bullish on KSK. GMR is not only a power company, GMR has also airports, roads, and we are very bullish on airports because we think they are unique assets. There is a good annuity model, and as traffic continues to grow with the economic growth, they will be able to get very good cash flows. And there is also a real estate in both the airports, Delhi and Hyderabad, which will act as a big kicker for the valuations once that monetization of the land starts.
Okay, I want to talk now about defense and railways. These are two new sectors that will benefit from the hiking of the FDI limit. How should investors approach these sectors or approach investment ideas in these sectors? Because again, in defense, many of the private sector companies, sort of run their defense arms quite literally as subsidiaries, right? So you either invest in the mother company or you don't, or you have a PSU option. So what should you do in defense and equally in railways?
It's a difficult case to make out which companies you should play in defense and railways, because still it is not very clear in what form the companies will benefit, because in defense especially, where the orders will be given out to companies where defense will be one of the portions of their entire business.
Right.
So you can't play a company just because of defense. So for example, L&T will benefit materially from the defense orders, but you can't play L&T only for defense orders. There is a huge portion of non-defense business in L&T, and same is the case with bulk of the defense companies. In railways case, things are slightly different. There are manufacturing companies who makes bogies, who lay down the rail lines and stuff like that. So there are specific companies, depending on how the outlook in railways pans out, one can decide to play whether a wagon manufacturer, a coach manufacturer, or some kind of a EPC company which lays down rail tracks, or some kind of a electrical HVDC or electrical installation, signaling systems, things like that. So in my view, railways is probably too early in the cycle right now. Defense, we have seen a lot of progress, so it's probably better to focus on defense in the next 6-9 months. Railways will probably take next 6 to 12 months to make the background work, preparatory work, before we start moving full stream ahead.
So in defense, are you saying maybe L&T is the best bet, not just because of its defense business, because hopefully of a recovery in almost, across the infrastructure spectrum, or would you say an M&M or a Bharat Forge for that matter are, better investment ideas at this point?
Our view is that we are more bullish on L&T because overall recovery will help order flow as well as margins for L&T. And the working capital cycle should reduce as the growth picks up over the next 12 to 24 months. And defense will be an added benefit or added booster to the overall economic upturn cycle in case of L&T. So both these factors make us more bullish on L&T than any other play in terms of defense.
I can understand your skepticism about getting into railway company right now, Shirish, because it's still only a promise and nothing yet really on the ground. But the fact is that the markets tend to discount very, very far ahead. So are you worried that these shares could go up too much by the time you really get a chance to have policy clear get into them, or do you think that it doesn't matter, it's too much of a risk to take at this time?
I think stocks will always ride on the optimism. The point I was trying to make is we don't see a concrete upturn in order flow over the next 6 to 12 months. Till then, only optimism or a bout of pessimism is what is going to drive these stocks.
Okay.
So if you're comfortable doing that kind of a bet, it is fine. Otherwise, for fundamentals to match the price movement, it will probably take 12 months or more.
Okay, fair enough.
There's another sector that I wanted to talk to you about, and I'm wondering how one approaches that. Some stocks have already moved up. For instance, some of the ceramic players, the sanitary ware players have moved up. This is the Swachh Bharat Abhiyan, and the hope that maybe, it will mean better sanitation across the country, and therefore some companies stand to benefit from that. I'm not sure whether the investment case is as linear as I've just mentioned right now, but your thoughts on this?
I don't think the case is so linear, because if you see some of these ceramics and sanitary ware companies, bulk of their business is driven by new house installations.
Absolutely.
And part of it is replacement demand. So unless we see the real estate segment picking up materially over the next 12-18 months, only a Swachhata Abhiyan cannot drive these stocks for a longer period of time, according to me. Again, in this Swachhata Abhiyan, the bigger issue is how will the funding come through. Even if somebody starts actually spending money and putting up toilets and whatnot, who will fund it? How will the cash flow go to these companies? Those are the issues which we need to be sort of focused on. But having said that, I think the real estate side looks promising, with the rates likely to come back, likely to come down over the next 12 months. I think there will be some amount of recovery in real estate, and which can drive the sales of these companies. So they are interesting bets, but for different reasons, not for Swachhata Abhiyan.
But if the real estate pickup comes through, would you prefer paint companies like Asian Paints to these? Because the companies like Asian Paints have been relative underperformers in the last 8 to 10 months.
See, finally, I mean, when it comes, when the upturn actually happens, when the rates fall, we'll have to look at valuations across in terms of whether it's a paint company or a ceramic company or any other sort of a derived play on the real estate demand. And that, depending on the valuations, we will take a call. Too early to say whether Asian Paints is better or a ceramics company is better.
Okay, let's talk about the core then of infrastructure, Shirish. Both in terms of large infrastructure companies, you've already taken us through your views on L&T, but other stocks, for instance, PSU, BHEL, also on capital goods, and where you see or when you see the recovery coming in. Yesterday we were talking to Ajit Gulabchand, and he says he doesn't expect to see new orders kicking in at least for another year. So we start seeing all of that reflecting on the balance sheets of these companies, on the financials of these companies, maybe only 2 years down the line.
See, in capital goods, you mentioned BHEL, so I'll first answer that and tell you about the order outlook after that. In BHEL's case, the problem is the order flow has been sluggish for the last 2 years, primarily because of the fuel issues. Now, at this point in time, we are not that bullish on BHEL simply because the fuel issues will need to be resolved first, where now a concrete progress has been made. However, actually, for people to start ordering power plants will take another 12 to 24 months, because it's not only fuel which you have to tie in. You have to get in land, you have to get in environment clearances, and then only you can look at ordering equipment. So I think it will take probably 12 to 24 months before we'll start seeing a big amount of jump in fresh order inflows in BHEL. Having said that, it's not that BHEL today doesn't get orders. It's getting reasonable amount of good orders from PSUs which have fuel, which have land, which have all the clearances. So it's a question of acceleration in those orders and not an absolute sense of orders. But we continue to be a little bearish on BHEL, primarily because we think the current order flow is only sufficient for them to maintain their current profitability or thereabouts. The growth in the earnings will not be there for the next couple of years, and which is why we are bearish on the stock right now.
Okay, that's
as far as
yeah, go ahead. That's the BHEL take. Go ahead. Yeah, got it. Yeah, go ahead.
As far as the recovery in capex cycle, I think we look at the whole recovery element in two parts. One is what I call infrastructure recovery, and other one is a capital goods part. Infrastructure, already the orders are happening, as you can see in L&T and some of the other infrastructure companies. Order flow is pretty good at this point in time in India, and we expect that to accelerate over the next 4 quarters, like as I said, in roads, in water, in buildings, all these things are looking to accelerate. Having said that, in capital goods, which is more of equipments, there will be some lag of anywhere between 9 months to 18 months, depending on how quickly we can see the balance sheets of the user industries improving, interest rates falling, and the user industries actually being in a position to raise equity or able to fund their expansion plans. So in my opinion, this will take at least 12 months or more, and hence the timeline of maybe 12 to 24 months before we see a major upturn in orders in the capital goods segment.
All right, my final question, Shirish, to you is about the coal auction details that we heard being announced by the government yesterday. I'm sure you're tracking this very closely. What's your take on how this is going to work? Because here onwards, we should expect that it will be auctions that will determine, all coal allocations and coal purchases to that extent. So can you talk us through what you make of the draft modalities that were announced yesterday and this entire space of coal?
So basically, we think it's very clear after the Supreme Court judgment that the entire coal which is being given to private sector will come through auction method.
Yeah, and that change actually took place in the UPA government's phase itself, that the fact that mines were only being auctioned, except that the auctions at that time didn't do very well. So I'm just curious to know whether you think this effort to auction, coming out of the Supreme Court decision, will succeed based on the modalities you heard as well.
So basically the main difference between the last time and this time of the auction is, last time you were doing incremental auction and that too for non-power segments.
Right.
This time you are doing auction for operating power plants whose mines have got deallocated. So if you don't get coal on 1st of April, your plants will shut down. So I think there will be enough and more interest in bidding this time around for these coal mines. What price discovery happens depends on the modality of how the auction works, whether it is a single bid auction or is it a continuously improving bid auction. We'll have to wait and see what modalities government chooses to follow. But it's going to be very clear that coal will come at a market price. The private sector will have to align their business model to coal coming at some sort of a in and around coal India's notified price. And I think that is a very big change in the mindset which the industry will have to accept.
Okay, it's interesting you say that, because yesterday the coal secretary went to great pains to keep saying that this is not a revenue maximization effort and we'll cap. He suggested some sort of cap when he was talking about the auction specifically for coal for power plants. And I'm just curious, I couldn't quite understand how he would cap prices in that auction, but not cap prices, in the auctions, let's say, for steel and cement end-use plants. So did you get enough clarity on how this is going to function here on?
No, I think the draft guidelines don't mention about the cap at all. I think in the final modalities, they may mention certain caps on the tariffs. What I think they would be looking to do is that if they don't put a cap in fuel pass-through in the tariff, then I can bid a very high amount for getting the coal, and if that gets passed on in the tariff, then it defeats the purpose of having economical power price for the customers. Which is why I think they will put some kind of a what is fuel pass-through possible. If you have a coal mine, there would be some kind of a cap on that. That is my understanding of it.
Okay.
But the draft guidelines don't have any clarity on this issue. But I assume that by the time month end, when they issue the final guidelines, I think this should be clarified by the government.
All right, Shirish, thanks very much for joining us. It's been fabulous speaking with you. Shirish Rane there of IDFC, giving you a whole host of insights on various aspects of infrastructure.